imagine, longest buying streak ever and just feels such a powerful headline. But in this 13-day longest buying streak, what has Nifty done? Precious little. So the way to look at this market is that the market in last 3 months has given you a 15% return. But in last 1 month, you've barely managed to get anything, which is a 2% return. So 3 month versus 2 month, I guess optically the market is telling you that the momentum now clearly seems to be waning away. So the positioning of the market is simple. Optically at new all-time high, technically the momentum indicators are missing, and trust me when I say that a disguised correction has already started kicking in. We are not feeling it, but everybody is talking about it, and that is something which we'll address going forward. Now in this kind of a market, there are two ways to approach this. One, you could say that okay, it's a matter of time that banks and some other large cap stocks would kick in, or the disguised correction in the market breadth is an indication that in the near term markets are likely to hit what could be called as a pause button. So my sense is that optically all-time high, technically and in terms of momentum, the market is lacking the punch, so to speak.
Okay, markets are lacking the punch. We're in consolidation mode, and that's how Monday as well played out, although we have advanced, as Aisha said, for 13 straight days on the chart. But it's interesting to actually monitor some of those stocks that have seen retail interest and the typical ones that are off their 52-week highs. So those that have underperformed. For instance, there's been so much news surrounding a Vodafone Idea, that stock off about 22%, double-digit cuts coming in from the 52-week highs for a Yes Bank, as well as a name like a Suzlon. Nikunj, what is this indicative of?
See, Avan, just like you have a canary in a coal mine, which is an indicator of which way the, oxygen levels in the coal mine are going to move. These stocks for me are early indicators, a harbinger of what the market activity is. Why have we looked at these three stocks? Very well tracked, very liquid, and largely dominated by not institutional investors, but HNI and retail investors. Or I would say in this case traders actually. Who would have thought that when markets are at an all-time high, the Yes Bank would have reversed by 27%, or a Vodafone, which was the talk of the town when they raised OFS. The OFS was massively successful, and Suzlon, which has seen a linear move. All of them have started correcting 27 to about up to 20% to about 15% each. Which means that somewhere the market in a sense is now telling you that either it wants to hit a pause button, or this disguised correction word which I am using perhaps has kicked in. It is just that we need to recognize it. If I extend this line to more stocks, let's say defense, shipyard, railways, trust me when I say that average correction now in some of these names is about 15% from the recent high. So you are in a market where you may feel happy about the Nifty level, but if you are on the wrong stock, and if you are with some of the performing sectors, especially PSUs and some of the stocks I mentioned, then there is a bit of a reversal which you really need to be careful of. Now this does not mean the bull market is over. This does not mean that this is the end of the road and there is going to be a bump ahead. No, this clearly means that the excesses in the market have started waning out. The path in the near term could be that of consolidation, it could be time-wise correction, it could be some more price-wise correction. But the bottom line here is that you need to recognize that the free flow in the market which was there after election and after the budget, that free flow in the market surely is getting arrested. So buy the market based on valuations and fundamental, not because of liquidity and momentum, because even though liquidity is strong, the momentum clearly seems to be waning away. I think waning away is the word which I would like to use to describe the market momentum.
And that's exactly the point that you were making, that, don't go by what the index is doing, don't go by that 13 streak winning figure. What's happening under the covers, below at an index level, that really shows you a real picture that it's not a roaring bull market by any means. But I think more than that, the talking point since last evening has been the SEBI study, which came about last evening, which has actually found that 70% of individual investors actually sell their IPO shares within a year's time. Investors are more likely to sell shares, posting positive returns quickly. The study, of course, also highlights a decline in HNI participation post-April 2022. So a little bit of caution. And IPOs have given big pops on listing days. And you are seeing very regular churn of booking profits.
See, that's the approach. And I mean, see, when companies are going public right now, and there is an absolute, I won't use the word excitement, but there's an absolute euphoria, and we'll talk about SME separately. What is the SEBI study indicating? SEBI study is indicating that everybody who's coming into the IPO market, they are coming just to buy the IPO, and it is actually more like a lottery for them. If they get the allocation, they flip it within the week and put that money in the next IPO. Now, that typically means that in the IPO market, the purpose of long-term wealth creation, at least at the retail level and at the HNI level, is not happening, and that in a sense is really defeating the purpose. See, one big change which has happened is that you don't have to wait for like 20 days or 1 month for the IPO allocation. Thanks to SEBI and the systems, IPOs now raise capital and the listing happens in less than a week, in less than 5 trading sessions. Within that, it's easy to understand that you know why this entire flipping process has started. Now, the bad news here is that the IPOs, in the excitement in the IPO market, is something which is an early indicator of a market peak or some kind of an euphoria. The good news here is that at least in the main board, some of these IPOs are still backed by institutional investors, unlike SME, where I think the market in a sense is really not. So one is excitement in terms of the process, and second is price. So in the large board, the main IPO market, I wouldn't say that pricing is out of whack, participation is out of whack, and the whole flipping is something which is not something which is very something you can say is the right process to invest in the IPOs. SMEs are separate. I will discuss it, but that's a completely different kettle of fish.
Yeah, we'll address that bit of, the market segment as well a little later on the show. But with market capitalization of SMEs actually surging to 2 trillion rupees, SEBI's Ashwini Bhatia also emphasized the need for due diligence and cautioned against inflating balance sheets. NSE's MD Ashish Kumar Chauhan also took cognizance of this and said that the Market Surveillance Committee has increased its vigilance on this matter.
Too much of SME sort of framework also, SMEs getting too much funding or their prices going up is also bad. And that's what creates apprehensions across, saying there is a runway growth there and we need to be very aware and take actions against. SEBI has also over the weekend made a statement that they are going to come out with new regulations on SME, which will be much tougher.
Maybe the diligence that is required of the chartered accountants, merchant bankers, and exchanges is possibly missing, and they need to do some hard work over there. And analogy can be drawn with a doctor. Please be good doctors to these companies. Don't give them steroids when they can survive on paracetamol. Growth is very much there. We are growing very, very fast, and we do hope that all the intermediaries help to fostering the SME system in the country.
All right, guys. Now, this is where the problem is. This is where the real bubble or the trouble is. And after bubble, there's always trouble. And we've been talking about it, that I'm sensing, or we as a channel are sensing, that there is a big bubble and trouble in the SME IPO market. At all levels. First, in terms of disclosures. Merchant bankers who are taking these IPOs public, they are not disclosing correct information. B, everybody thinks that it is more like a casino, where you come, you just participate, you get allocation. The stocks, after listing, they have crazy levels in terms of where they open up, and then you essentially are able to flip. See, there is an absolute disregard of business, the nature of earnings, and valuations. And when there is euphoria, and when there is this catch me if you can catch me kind of a syndrome, there is need to exercise caution. There are a lot of merchant bankers which I think are not doing what could be called as the fiduciary duty to really take these companies public. And I think clearly at all level in the SME IPO market, greed is at play. So checks and balances, they really need to be imposed, because this is one end of the market where institutional investors are not there. This is one end of the market where you only have large HNI and a lot of retail participation. And when the cycle will reverse, I think it is going to be a very ugly kind of a scenario, and a lot of so-called investors who call themselves as investors in SME and who are just coming here for price change, they may actually be just holding these stocks for a long period of time without any exit. And I use this analogy that when the music is on, everything is great, but when the music stops, well, then you have to run for the chair because there would be no vacant spot. And everybody I've spoken to, they seems to be indicating that, okay, this is the way how, this is something which needs to be checked, it needs to be addressed, and I'm glad SEBI is actually doing it. So you need to really have checks and balances at all levels. Merchant banker stroke broker, B, the whole approach in which regulators have been clearing these IPOs, that really process needs to be changed. And C, in terms of participation, which is I would urge our viewers that if you have been lucky in the SME market, if you've been investing in the SME market, it's time to protect your capital rather than trying to invest right now, because it is almost becoming like what could be called as a casino. And guys, capital markets are not casino. Companies that need capital, they come here. The investors who like those businesses, they invest in them. And in the SME market, I think it is almost like, I hate to use the word, almost like a Joe Kadda now. That is how it is moving.
Yeah, absolutely. Getting a little wary over there, and it's time to definitely turn cautious in case you haven't already.